Let's welcome in the founder of Appaloosa Management now. David, welcome back. Thanks so much for being with us.
How you doing?
I'm good. It's great to have you, especially at a time where stocks are basically hanging around record highs. The 10-year, the yield's been ticking up. I said it touched 170 earlier. It's dropped a little bit back. Do you like the equity market here?
You mean like I like you, Scott, or are you talking about like on a personal basis, or
personal, professional, however you want to characterize it, David?
Look, I like it as a long-term instrument that I think everybody needs in their portfolio.
Okay. Do you like it for the risk reward right now in stocks, given where valuations are relative to where rates are?
As a trader, you're asking me? As a trader or as an investor, Scott?
Hello, traders. Captain Jim James here with your daily brief for the week of Thanksgiving. So this is going to be an interesting video for the upcoming week. Looking at the screener here, you can see that we have the Fed chair. We know that the Fed chair will be announced at some point this week before Thanksgiving. If the Fed chair was nominated and anyone thought that the nomination would disrupt the markets, that nomination would take place over the weekend or outside of market hours. The longer that we don't hear who the Fed chair is, the more likely it becomes Jay Powell. Now, I did post on Twitter that Lael Brainard would also be very positive for the market. You should still look at the bear case for Lael Brainard if she's nominated. Have some concern in that, as when you look back in history on changes to the Fed chair, they can become the hatchet men even if they are perceived as bullish. So just keep that in mind. And she is considered overly bullish for the stock market. But if it's not Jay Powell and it is Brainard, it's possible, like Carter did with Volcker back in the, I think it was 79 or 80. He was anticipated to be dovish, but in reality, Carter wanted inflation to move down so he would win re-election. Now, that didn't work out for him, so I don't know how that impacts this time around, right? But keep that in mind. I think the reaction with Brainard is going to be positive for the market, but what the market doesn't like is uncertainty. They don't care if the uncertainty is positive or negative. They really like the status quo. So consider that with Brainard. The rest of them are pretty much dovish, except for Bostic, and there's a couple others that would be bearish as well. That would be bearish for the market. But I would expect if you got a bearish Fed chair nomination, it would have happened this past weekend. Or if we don't tear anything by Wednesday, they might be saving a bearish or even something that could disrupt the market for Thursday or on the weekend, Thanksgiving or the weekend coming up. Even if it's anybody other than Jay Powell, they're probably going to save it for Thursday or the weekend or non-trading hours. Jay Powell we are pricing in rates for the Jay Powell plan, right? So if he gets renominated or if he's given the seat, right, then it's the status quo. And the market should be the least disruptive with the plan that we are on right now. The idea behind Brainard being disruptive to the market on the upside is that they did float this week. There was news floated around the country this week that they could possibly push off a rate increase. Now, if we've priced in rates coming into 2022, you better believe that we're going to get that green bar up. Or it's even if not now, at some point down the road. So anyways, just keep that in mind as we move forward this week. The next thing to consider this week is what major news we have on the economic calendar. And really the one that you should be looking at this week is personal income. That's the one that you want to be focused on. Yeah, some inflation is important, but personal income is going to be a big one for this week on Wednesday. And the docket on Wednesday is quite large. This can create some volatility in the market as we move forward, though I'm unsure if it will create a drop in the market this week. Now, I did try to hint at this video over the course of the weekend. I think some people got which week we're in incorrect, that the 47th week is a down week. In reality, time data graphs are typically done on a European system, and they differ from the US system this year. The 47th week was last week, and we were down even though the indexes were up last week. So if you were to look at any of the data or charts in the US for where we are and how this week should turn out, we should be in the 48th week, which is one of the best weeks in the year. I think it is the best week in the year. Now, I'm going to talk before we get into the charts. I want to talk briefly about what's going on in the markets to give you some idea of what's happening. So we had a trade that took place in May, I think it was May of 2020, and that was the COVID trade, the stay-at-home trade. Those trades are being wrapped up right now, okay? And those really do affect a lot of the tech and long hold type of stocks, right? These are stocks that you buy and you hold them for long periods of time. They're not real goods. Now, as they wrap up these trades, some bad news is coming out from some of these trades, right? So you're seeing some ERs come out, they're terrible, even though these stocks were pumped up. These include things like PayPal, Pins, Disney. Snap was some weird news, right? Or some of it was payment or advertising. And I've heard this argument on the internet that it's like tax loss harvesting. That's all bullshit. These are banks that are taking profits and that trade off the table. Now, the only tax loss harvesting that's being done is by you as the bag holder, okay? So this trade is ending. And what you're looking for is the whole picture. So you're seeing the trade ending on stocks that are being dumped currently and stocks that are being pushed up. So if you look at like an Apple per se, they were stagnant for an entire year. So they're pushing the Apple up, right? They're pushing Apple way up to cull profits from that investment that they had. Same thing goes for Tesla, some of the dumping that took place in Facebook. Same thing's going on with Amazon. So you're going to see this culling of profit from some of these long hold stocks that didn't actually go up, right? They kind of traded sideways in the big scheme of things. And the ones that did go crazy are starting to sell off. Now, I do believe at some point in 2022, like everybody else, that tech will sell off to some extent. You're still going to get interest in some of the big name tech stocks. You'll see like the Apples and the Amazons, they'll be fine or whatever. But you are going to see this trade from 2020 kill some of these stocks. And the trade that's coming into 2022 is going to be real goods. You're going to be looking for some growth tech, but you're really going to be looking for is that small to mid cap demand stocks. So start thinking about real goods that you can't have right now, but you will buy once the shortages end. So let's say you can't have your house built. Look for stocks that will have high demand for the next 2 or 3 years, especially if the market starts to go sideways or down. Start to look at any of these real goods that you're going to get for yourself, your family members, a loved one, or for your children, and especially if you can't get them right now. Another trade is going to be, instead of focusing on EV companies, the trade is still alive to go after the materials and services and parts that go into the EV cars. You're going to be a winner over time more consistently than you are with some EV companies. So we'll talk about this more down the road as the year ends. And this goes back to some of my previous videos. I talked to you about culling your stock portfolios. I think I told you to do that a month or two ago. And then to only play individual stocks or indexes as we head into this season. Had you done that, because I hear other people out there saying I shouldn't have sold my Apple stock. You most definitely should have sold your Apple stock, taken your profit, and then you play short trades, short time trades from now. And there's a famous trader that talked about this. I always forget his name, but he owns a football team and he's part of GS, a head trader. for GS for a long time. But he talks about the same thing, right? You pull your money off the table, and then at this point, we're going to drive the market up as high as we can, take our profits and take our money off, the rest of our money off the table as this cycle ends, okay?
Do you like it for the risk reward right now in stocks, given where valuations are relative to where rates are?
As a trader, you're asking me? As a trader or as an investor, Scott?
You pull your money off the table, and then at this point, we're going to drive the market up as high as we can, take our profits and take our money off, the rest of our money off the table as this cycle ends, okay? All this has been laid out. It's important. Anyways, I'm just going to pass all that. There's no need to discuss that here. The point, though, is this. You should have cash ready to deploy for 2022 and beyond, right? You should be looking towards IWM, the Russell, RTY. You want to see that last sell-off in small caps so that we can take small caps long into the new year. And for the rest of the year, I would say to you that we're going to run up NQ and specific stocks. So if you follow me on YouTube and you don't follow me on Twitter, come find me. Just Google search Captain Jim James. Follow me there. Set the alerts in your Twitter account, or create a Twitter account. Set your alerts. I'm going to try to limit how much I tweet, and what I will do is focus on whichever stock is pumping the market. So if Amazon's pumping one day, or if Apple's pumping one day, whatever stock is driving the market, we'll try to focus on jumping on that train for the day, right? We'll get in on some plays, and we'll ride that up. Same thing would go for, or if you're scared about where the market's headed, you can always trade the SPY or the Qs. But if you're looking to capture the most money as the market starts to go vertical, just follow me on Twitter. That's what I've been doing the past month or so, and it's been very profitable. It should leave you with a nice end of the year gift. One last thing would be the danger in the market right now. I always talk about how much you're risking. It's like 10%, 20%, 30%. You're taking on risk, or how to take on risk even if the market were to fail. That you're able to accumulate lots of money and only lose small amounts as we make those moves up, okay? And the last thing would be the whole market crash scenario. I just don't see it. I don't see it. I think if we even if we corrected, let's say 20, 30%, that's not a market crash to me for where we are right now. The past couple of years have been outstanding. All my trades now, I don't hold any long-term stock. I don't have anything that I own that I'm looking out to hold it from right now until 3 years from now. I will wait for that as we head into December and January to make those trades. I'm looking for the top in NQ and SPY, not the top, but that winter top that happens every single year seasonally. And then I'm also looking for where the banks are going to deploy their money seasonally, where we are right now. Okay, so I'm going to just show you the SPY chart for tonight. I was going to show you some other charts, but in reality, what you really need to know is the SPY chart. The SPY chart, or ES, I'm showing you the ES chart, but the SPY chart, the ES chart, SPX, really does give an idea of where the market is, okay? The general health of the market, where the market's going. And we're going to talk about the SPY because it's going to encapsulate where the market is. Even though IWM is going down, the market is still healthy by what SPY is showing. And we're going to probably trade the SPY, the Qs this week. And we're also going to trade those individual stocks, right, as they come up. As that gamma comes into those stocks, we'll trade those. Now, I talked in my last video that people were looking at like RSI indicators, all kinds of different goofy fucking indicators. Sorry for swearing, but people check all these indicators and say, well, it's oversold, it's over this, it's outside of its trading bands, it's Bollinger Bands, blah, blah, blah. In reality, like I said, they're trying to get themselves back into this channel, if not create a new channel for end of the year. We'll put that new channel in over here. You should just reset your indicators if you could, but you can't, right? We fought our way back into this trading channel. I think we're trying to even fight into a steeper trading channel right now. But this is where some indicators really do suck. They give false readings, okay? I also, oh, sorry for the noise in the background. I have some family here, so I'm down by my basement's washroom and all that kind of stuff. By my furnace and basement. I'm not in my office today. The thing to know is this, okay, is that SPY is up right now, okay? It's probably going to continue to go up. We're in this period where from now until Friday, the market in general and specific stocks should go to some pretty wild gains this week. We're going to bring this down a little bit closer. And I would expect some weakness in the market after Friday. You also have to be concerned about the volume in the market. The volume's going to go away. So let's say you took some calls on Monday and you wanted to hold them straight through into Friday. I would recommend. Hold on. Let me get my whiskey here and have a little sip as it's Thanksgiving week. So as we head into Friday, with the volume dropping off, it'll be tough to hold calls through Thursday into Friday. They might not print. So if you're going to hold all week, I might recommend some spreads, and that way you don't have to deal with that volume drop off. Or just trade each day. You could trade Monday into, let's say, Tuesday end of day, and then you could also pick some FDs up from, let's say, close of Wednesday into Friday, in case Friday is like a mind blower. It goes through the roof, right? And anyways, so that's what my plan is to day trade it and then hold some FDs over each night from day to day. Now, let's look at where support is, okay? There are people that are calling for doom and gloom, and that's right down here at 45.46, right where we've dropped off originally. And we know that we have some decent support here because as we sold off, we bounced right on this trend channel, this established, respected channel we've had all year long, actually since 2020. We know we got a good bounce here. We got another bounce up here. We'll get a little bit closer. We're going to put some support right over here. This was the Tuesday low of last week. I talked about this low back here, and this is the swing low from last week. And you'll have another swing low here. Or no, the next swing low will be shown. It'll be somewhere up here actually, because we're at what the trend is. Remember, the trend is your friend, right? Don't fight the trend until it changes. So we did have the swing low last week down here. That was at 46.68. And our close on Friday was right here. I put this line in already on Friday. So this would be the deepest. I'm bullish, so in my view, this would be the deepest that we're going to go on Monday, 46.91.25. We'll come back out to the month view real quick. Take the auto off. And we know that this is Friday right here. We know the top of this channel. Now, I want to show you something here in a minute, okay? So this is where we should be shooting for. We know we have some resistance above here, right? You see that resistance? And we know that we're shooting to come up here. The one thing you want to be looking for is as we start to make our way up, you're going to be taking these trades all the way up once we break through and hold. Or you're going to take the trade off at each resistance point, and then you're going to put the trade back on so that we can run this all the way up into the top of this channel. Now, I do want to go back and show you something real quick here, okay? That's interesting. And someone pointed this out on Twitter, I think. I don't remember who, but someone pointed this out. And I like this because I have projections of 5,100, not 5,000, 5,100. So we're going to look at that real quick. And then we're going to go back to what we were talking about. Oh, I already have it up there. Okay. So we are going to start to talk about the possibility of this happening. We're just going to make this real brief here. We're not going to, this is going to panic some people. And in reality, There's good reason for us to go here. This would destroy bears and... Oh, I got this one wrong here. Got this one wrong. It'd be something like this. See if I can get this right here. Right there. Something like this. This is possible. It could even... Let's see, where's that tag right there? Could even use this one right here. Now, a channel like this is possible where we bounce or even tag up here. Maybe we tag up here at this 480, come back down for a week or two in early December, and we actually move up. This 5100 is January 18th. This is possible. Keep this on your plate. If you're a bear, I would be real concerned about us moving up here into January. If this channel shows itself, if we jump over this 4800 and start going sideways here, we could make one last extension up and then start to sell off into mid-January. So think about this right here, okay, as we move forward. And I think you can even see it. Let's see here. Yep. So if you're ultra bullish, you're going to look for a jump above this channel here. And if we start to ride this all the way up or stick, it's weird too. It doesn't actually have to look that crazy. If you were to get up into this upper or this new trading channel and we just slowly grinded into January, there'd be two things that would happen. Bulls would be too scared, so they're not in the market. That means though it's only banks in the market, and retail bears and probably some retail bulls would fuel this run up with low volume into January. So anyways, that's all I've got for you for Thanksgiving. Just want to highlight briefly real quick the plan going forward. If you follow me, if you don't, try to follow me. I will attempt to track specific stocks that are moving the market as we go up. And I will focus on them so that you have plays that you can make. And then I will also be trading the SPY or the Qs actively each day. And I'll try to limit my posts during trading hours, the shit posting or the busting balls and all that kind of stuff, so that we can make a bonus, right? Make a holiday bonus. See you all out there tomorrow. Happy Thanksgiving.